Are you tired of feeling lost when hearing news about money and financial markets? The concept of money and finance can be confusing when you're new to it. If you've ever wondered why the topic of finance and money is so important, where it comes from, and how it actually works, then you've come to the right place. In this video, we'll delve into the mysterious world of money and financial markets and explain exactly how it works. From the basics of what gives money value to the need for banking and a stock market, we'll uncover these hidden realities behind money to empower you and your financial future. Let's get started. Before we delve too deep, let's take a brief look at the history of money. Where did it come from? Why do we need it? How did it all start? The idea of money has been around for thousands of years. Long before money came to mean paper and coins or gold and silver, ancient cultures and societies would trade items such as shells, feathers, or beads as currency. In fact, money was basically anything with a perceived value that you could exchange for another thing with a perceived value. It was more of a bartering system, but naturally, it got difficult to carry around these objects over time. As societies became more complex, money became uniform and coins made of precious metals such as gold and silver were introduced. It wasn't until the creation of standardized coins that the concept of money really took off. Did you know that paper currency first appeared in China in the 7th century, but it didn't arrive until much later in Europe in the 17th century? Across history, we've seen currency evolve from physical paper and coins into checks and credit cards, and now digital payments. Once using copper coins to buy a loaf of bread, we can now spend money through the internet for goods and services with just the click of a button. We've come a long way, wouldn't you say? Money is an essential part of modern economies and has enabled the growth of trade and commerce globally. It serves as a store of value that preserves wealth, a medium of exchange that allows us to buy goods and services, and a unit of account that provides an objective measure of value between buyers and sellers. So how exactly do all of these functions work? Let's take a quick look at each of these three. First, a store of value. Money allows people to store value over time. This means people can save money and use it later to buy goods and services. But what is it that actually gives money its value, its purchasing power, and what affects its purchasing power? Scarcity, how much of it there is. Inflation and deflation, the increase or decrease in the price of goods and services over time, and its usefulness over time. Most importantly, public trust determines the value of money. What makes money a reliable store of value is that the users of it agree to its specific value. Secondly, money acts as a medium of exchange. If you were alive in ancient times and you wanted a loaf of bread, for example, you would have had to trade other goods and services for it. Today, you can simply walk into a bakery and pay for it with cash or a credit card. Money is a medium of exchange because people accept it as payment for goods and services. I think you would agree that this is a much more efficient system than bartering, which is inexact, complex, and time-consuming. Finally, money is a unit of account, which means money is a way of measuring the value of goods and services in a standardized way. It allows users to compare the price of different goods and services and make informed decisions about allocating their resources. For example, imagine you want to buy a new laptop computer. You could look at the price of the laptop in dollars, which is the unit of account in the United States. By using dollars as the unit of account, you can compare the price of the laptop with similar products, say two different brands of laptop, or in relation to a desktop computer to determine which is the best value for your money. It goes without saying that money plays a crucial role in the economy, and understanding how it works is essential for anyone who wants to make informed financial decisions. At its core, the economy is simply a system of production and exchange. People produce goods and services, and they exchange those goods and services with each other using money as a medium of exchange. That's how simple the concept is. Money facilitates these exchanges, making it easier to trade goods and services instead of bartering or exchanging physical goods directly. Money makes transactions faster and more efficient. It also helps decision makers allocate financial resources efficiently and encourage economic growth. When people can use money to buy and sell goods and services, they can make better decisions decisions about how to budget their limited resources. For example, if the price of a particular good is high, they may buy less or save for it over time, compared to if that good is priced low. In that case, they may buy more of it, for example, when that good is on sale. Beyond these practical applications, the use of money helps to stimulate the economy by encouraging innovation and entrepreneurship. As we all know, governments play a crucial role in the economy, and one of their key functions is to raise money and control the money supply. Governments raise money through a combination of taxes, borrowing, and creating monetary policies. When governments collect taxes, they are taking money from individuals and businesses to fund government programs and services. Governments are also able to borrow money to fund projects and programs that they don't currently have the tax money to fund. Governments also control money through monetary policy. Monetary policy refers to the actions central banks take to manage the money supply and raise and lower interest rates. For example, a central bank like the Federal Reserve here in the United States might increase the money supply by buying government bonds, which puts money into circulation and can help stimulate economic growth. Alternatively, a central bank could also decrease the money supply by selling government bonds, which can help to combat inflation. You've probably heard of the saying, "create money out of thin air." While you might not be able to do that, the government most certainly can. Central banks can also print money to raise money. However, if a government prints too much money, it can lead to inflation. It can then erode the value of the currency and make goods and services more expensive for consumers. Perhaps one of the most confusing institutions with control of large quantities of money is the stock market. It helps to think of the stock market or stock exchange as a marketplace where stocks, bonds, and other securities are bought and sold. When we say securities, we mean the representation of ownership in various companies and assets. Publicly listed companies on the stock market exchange offer fractional ownership or equity of their company for the public to buy and sell. Publicly listed companies on the stock exchange offer fractional ownership or equity of their company for the public to buy and sell. They also offer bonds in the form of fixed income securities, which represent the debt of the company. The stock exchange allows almost anybody to own parts of companies while allowing companies to have access to investors whose money funds their operations and new investments or innovation. These days, if you have money and access to the internet, you can own a small piece of your favorite companies. However, the stock exchange is not just about buying and selling individual stocks. It's also a reflection of the overall health of the economy, and the value of stocks and bonds can be influenced by a wide range of factors, including government policies, economic indicators, and global events. Now, the real question is, how do you value money in your life? Do you save it, spend it, invest it? Well, that's none of our business. But if you're curious how to best manage your money and keep it safe, stay tuned for our next video. Remember to like and subscribe.